Hey, so let's talk about the economy. If you've looked at the market lately and just felt completely lost, like you're trying to find your way in a super thick fog, well, you are definitely not alone. We are staring at one of the most confusing economic pictures in a long, long time, with all the signals pointing in totally different directions. So let's just dive in and see if we can clear some of this up.
Here's how we're going to break it all down. First, we'll get into why everyone's feeling like they're flying blind. Then, we're going to tackle three big contradictions that are causing all the confusion: the AI paradox, what's going on with the consumer, and the tough spot the Fed is in. And finally, we'll try to figure out what it all means for us trying to navigate this thing.
So, where is all this confusion coming from? I mean, it's not just the usual market jitters. The real cause, the root of it all, boils down to one single, historic event that basically just turned the lights off on our entire economic dashboard. And that was a massive government shutdown.
You know, this quote from Market Minute just hits the nail on the head. That phrase, flying blind, is not an exaggeration. It's really what's happening. Without that constant flow of essential government data, pretty much everyone, from Wall Street traders to small business owners, is just guessing. It creates this huge information vacuum, and that vacuum, well, it gets filled with volatility and a whole lot of speculation.
And listen, this wasn't just any old shutdown. We're talking 43 days. That made it the longest in U.S. history. Think about that. Over a month without the vital stats that tell us where our economy is and where it might be going. It was a completely unprecedented data blackout.
And the impact of that? Well, it was immediate, and it was very, very human. By the time it was all over, almost 3 million paychecks had been held back from federal workers. That's nearly $14 billion in missing wages. That is a huge blow to families, and of course, to the wider economy that really depends on their spending.
And this right here is the heart of the problem. That data blackout meant no jobs report, no new inflation numbers, no trade data, nothing. This information vacuum is the real reason for all the chaos, forcing everyone to basically guess what's going on. And as we're about to see, that has led to some pretty serious paradoxes in the market.
So that brings us straight to our first major head-scratcher, the wild, conflicting signals coming out of the world of artificial intelligence. I mean, is it the engine that's going to power all future growth, or is it a massive bubble that's just about to pop? The market right now just can't seem to make up its mind.
What's so fascinating here is the market's total split personality. On one side, you have this absolutely incredible, relentless demand for the nuts and bolts of AI. But on the other side, you've got a huge sell-off in tech stocks with investors getting really nervous about how much all this stuff actually costs.
Just look at the hype for a second. NVIDIA, the company making the chips that are basically the brains of the AI revolution, posted a jaw-dropping quarter, revenue up 62%. It's insane. And it's not just the hardware. Google dropped Gemini 3, a model so powerful it just leapfrogged the competition. The momentum behind AI is absolutely real.
Okay, so with news that good, you'd expect a massive market rally, right? Well, nope. And this quote really gets to the core of why. The market's reaction was, let's say, lukewarm. Because, as Center Investment Management points out, investors had already priced in perfection. The bar was just set so unbelievably high that even these spectacular results weren't enough to move the needle. And here it is. Here's the reality check that's got Wall Street spooked. Meta is planning to spend up to $72 billion on AI infrastructure next year. Just think about that number. And so investors are starting to ask a very simple, very fair question. When are we going to see a return on all this cash? That fear about the cash burn is putting a real damper on the whole sector.
Okay, so that's the AI paradox. Now let's move on to contradiction number 2. And this one involves pretty much all of us, the American consumer. Are we feeling good and spending money, or are we tightening our belts? Right now, the data is telling two completely different stories.
First up, the job market. It's a classic mixed bag. On the one hand, the economy added way more jobs than anyone expected. That's great news. But then, on the other hand, the unemployment rate actually went up, and a key measure of joblessness hit a 4-year high. So here's the deal. While the headline number looks strong, there's some definite cracks starting to show underneath.
And this slide shows you exactly how those cracks are showing up in our spending. Just look at the difference here. Walmart, which is all about the essentials, is crushing it. Their e-commerce sales are booming. But then you look at retailers that rely more on discretionary spending. You know, the wants, not the needs, like Target and Home Depot, they're seeing shoppers pull way back. It's a really clear sign that people are becoming a lot more careful with their money.
And if you want to know how people are really feeling about things, look no further. This survey from the University of Michigan is basically the gold standard for consumer sentiment, and it shows our view of current conditions has tanked to a record low. So even if the job market is kind of okay, all the worries about prices and the future are really weighing on people.
All right, so you've got a confusing tech sector, a confused consumer. Now just imagine for a second that you're the Federal Reserve, and your job is to steer this entire economy. That brings us to our third and final contradiction, the Fed's huge dilemma of having to make massive policy decisions while, you guessed it, flying completely blind. Because of that data blackout we talked about, the Fed is in what one report called an unenviable position. And that's putting it mildly. They don't have the solid inflation and jobs numbers they absolutely need to decide whether to raise or lower interest rates. This makes the market hang on every single word from every Fed official, and it's leading to some pretty wild swings.
And here's a perfect example of that whiplash in action. In just 24 hours, one day, the market's bet on a December rate cut went from a less than 40% chance to over 70%. So what changed? A single speech by one Fed official. That's it. This is what happens when you don't have hard data to go on. Rumor and talk end up driving everything.
Okay, so we've got the AI paradox, the confused consumer, and the Fed's big dilemma, all happening inside this data fog. So what's the big takeaway from all this? How do we even begin to navigate it?
Well, the bottom line is this. The market is going through a necessary reset. All this volatility, as uncomfortable as it is really just the market's way of processing all these conflicting signals. It's trying to recalibrate for a new reality. It's forcing everyone to ask tougher questions about profit, about consumer health, and about where policy's headed in a world where, frankly, the old maps just don't work anymore.
Which leaves all of us with this final, really critical question. For policymakers, for investors, for everybody, what's the right move in this kind of environment? Is the bigger risk moving too fast based on the incomplete info we have? Or is it not moving at all, waiting for the fog to clear, even if that means you get left behind? There are no easy answers here, but that is the central challenge everyone is facing today.
And on that question, we'll wrap this up. If we helped clear away even a little bit of the fog for you, let us know by liking and subscribing. We would love to hear your take down in the comments. What do you think is the bigger risk right now? Thanks so much for watching.